Welcome back. Joining us now, a very special guest, Jim Rogers, to dive into some of the latest trends and what we're witnessing in global markets. Jim, great to have you with us. Markets just seem to be going from strength to strength. When the last time we spoke as well, we were seeing highs and continue to see new records being made all the time. Has anything significantly changed in your view, Jim, or are you even more perhaps concerned or eyeing what could possibly be the formation of a bubble? Is that how you're viewing the current situation, as we now also see commodities spiking, other asset classes across the board setting new records?
I told you before, yes, bubbles are beginning to develop. We don't have full-fledged bubbles yet, except in bonds. Bonds everywhere are a full-fledged bubble. I mean, at the moment, if I were buying countries, I would buy Japan, I would buy Russia. Both of them are still down dramatically, but lots of money is going to pour into both of them because they are cheap. And likewise, agriculture. You see what's happening to agriculture since we spoke last. No, I'm not buying America. America's at an all-time high. Japan, Russia, agriculture.
Makes sense. And the latest data out of Japan was encouraging as well. On the commodity front, given what we are seeing on crude, I did want to get your perspective on that. The blackouts in the U.S., the fact that we're seeing that supply shortage versus outlook on growth as well. What's your reading of that situation as crude finally comes back to those pre-COVID levels?
Well, crude is at the highest it's been in over a year, as you well know, and so it should have a rest to have a correction somewhere along the way. But no, I mean, the production of crude and the reserves of crude have been going down. The bubble popped in fracking, and now people realize, oh my gosh, world supplies are declining. And by the way, that's one reason I'm buying Russia, because Russia's depressed and Russia has a lot of oil and a lot of agriculture.
When you say agriculture, Jim, and you've been bullish on this for a while, what all would that include? And what are some of would you be looking at the commodity exchange, or would you also be looking at key markets where you see this emerging as a strength? I mean, here in India, we've been focusing a lot on the domestic and the rural recovery, for example. Within the EM basket, would India feature, or would certain themes within the market feature on your radar?
I love India, as I've told you many times. If you can only visit one country, you should visit India. It's the best to visit in the world. I don't have investments there now because the market's at a high. Japan is down 35% from its high. Russia's hated. I'd rather buy places that are down. As far as agriculture, I'm a little lazy. I like to buy the index. All the studies show that index investing outperforms most people, especially lazy people like me. I buy RJA on the New York Stock Exchange because it's an agricultural index. But if you know what you're doing, I should buy the individual commodities. Most people, I'm lazy. But if you know what you're doing, buy sugar, buy wheat, buy the things that, find what's depressed and buy individual commodities.
Sure. Jim, in light of the escalating fuel prices here back in India, and they're pretty much skirting around the all-time high, both petrol as well as diesel, just wondering whether the trajectory of crude prices is going to remain intact, barring a few odd aberrations here and there.
Oh, no, we're going to have much higher prices of food, fuel, nearly all commodities. As I look around the world, the single cheapest asset class is still commodities. I mean, bonds are a bubble, as we discussed. Bubbles are developing in stock exchanges. No, commodities are still very, very cheap on a historic basis. I mean, silver's still down 45% from its all-time high.
Yeah, fair point. Also wanted to understand, since you're talking about inflationary environment that we're currently in, what do you think is going to be the central bank strategies across the world? Are they going to be inflation warriors, or do you think the need of the hour is much growth and they wouldn't really be perturbed by inflation and asset prices moving up?
The last great central banker in the world was in India. He's gone now, as you know, but he was fabulous. There's nobody else in the world in a central bank now understands money, inflation, or anything else. And all of these guys think that printing money is necessary and is okay, and there will not be inflation. Now, history shows that when you do this continuously, it has always led to inflation. Maybe they're right. Maybe it's not going to lead to inflation this time, but I'd rather bet on silver than on paper money.
Jim, just to take your thoughts forward, in last 10 years, all central bankers have followed a very loose monetary policy, yet inflation has not come back. So it was not that liquidity was not there, liquidity was obviously there in abundance. So if in last decade, liquidity has not brought inflation back, why do you think inflation will come back in next 2 or 3 years?
That's an extremely good question and a good insight. Part of the reason is because oil prices collapsed. And since oil is the single most ingredient for all of us in our lives, no matter what we are and where we are, that is one reason. And also there was a lot of production. Now, maybe it is different this time. Maybe the central bankers are right. And maybe we're not going to have inflation this time around. But I have learned that when you hear this time it's different, you should be very worried.
Jim, do you fear that America is going the Japan way, which is low interest rates and lot of liquidity? These are perfect recipes for growth to come back, but that's not happened in Japan. Is Japan going the America way? And is America going the Japan way? And if indeed America goes the Japan way, which is the largest economy in the world, then it's not great news.
Well, Japan, the central bank says he's going to print his word, unlimited amounts of money, and he's doing it every day. That's one reason I'm buying Japanese ETFs. By the way, listen, Japan's got a dismal future. It's got a terrible future. I've written 3 bestsellers in Japan in the last couple of years talking about it's got a disaster ahead of it. But if he's going to print all this money and buy ETFs, I am too. But no, it does not have a good future. And now America's doing the same thing. America's the largest debtor nation in the history of the world now. Is this all going to end up well? I don't know. You should watch E.T. and find out. But in my view, and in history would say, this is not going to end well. America's going to go deeper and deeper into debt and print more and more money, just like Japan, and try to drive interest rates lower. Japan is doing the same thing, building up more and more debt. Maybe it's all okay. Maybe it's different this time. But if it is, it's the first time in history that this has worked.
If you have to, let's say, go long on an entrepreneur or a company or a business, will it be Tesla? Will it be Alibaba?
Those are my only 2 choices. I'd rather buy an Indian stock.
I was referring to the obvious ones.
No, I would not buy either, maybe Alibaba, but history shows. The Dow Jones Industrial Average, you've heard of it, started 125 years ago. None of the companies that were in that average when it started are there anymore. They have all disappeared. History always changes. What is on top today has never been on top decades later, and it won't be now. And America won't be on top a few decades later. This is pretty clear throughout history. Now, if I had to pick a single, I don't know a single company. I would like to probably an Indian company, maybe. I'm sure that right now there's some young Indians down in Bangalore that we should all invest in. I don't know them, or maybe in China. But no, I mean, please, history is pretty clear that Japan is going to go have problems. America is going to have serious problems in the next few decades. India has a better future than Japan and America in 2021.
Jim, just to go back to the whole point on agriculture. Now, agriculture commodities, some would also argue, was a function of demand and production. But given that there is mechanization in the world, given that the whole genetic seeds are now available, the borders which existed between various countries, they are no longer there. Americans are producing soya bean that has been consumed by the Chinese. India is producing mangoes that have been produced by folks like you sitting in Singapore. Do you think the agriculture bull market this time, purely because of the economics, availability, and the fact that transportation is easy, may not be all that strong?
We've had mechanization and technological advances in agriculture for 150 years. The number of farmers in America has dropped by 90% or something in the last 100 years. Everybody has machines now, but somebody still has to make this happen. We still have to have human beings, and maybe we're never going to have agricultural cycles again. I should watch ET more often. You guys have changed the whole world. But I know that we've had agricultural cycles for centuries, and we will again because of weather, humans, disease, all sorts of reasons. But if ET is telling me, oh my goodness, no more bubbles, no more bear markets, no more inflation, no more agricultural cycles, hooray for ET. I've been a fan of ET for decades. Now I'm even more of a fan.
And we appreciate it. Jim, I want to also get a sense from you, given the kind of debt situation and the kind of framework you've described, the dollar. Now, it is softening just a touch. This has been a hot debate as to whether or not we will see an impact on the dollar. It's held steadfast till now. But vis-a-vis some of the other emerging currencies, it's actually starting to soften just a touch at the moment. What's your outlook there?
Well, I own a lot of U.S. dollars. I've just explained to you that the U.S. is the largest debtor nation in the history of the world. It's getting worse every week. But most other paper money, most other currencies are also under suspicion now, and most are being debased. And when the next problem comes in the markets, whether it's this year or next, I'm sure that people are going to race to the U.S. dollar because they think it's a safe haven. It's not. I expect the U.S. dollar to get overpriced. It's been correcting this year, which is fine, which is great, but it will go very high. It will get overpriced in the next bubble, or the next turmoil, I should say, or maybe currency bubble, at which point I'm going to have to sell my U.S. dollars. I don't particularly want to because I'm an American citizen, but I see what's happening. I'm going to have to sell my U.S. dollars and find someplace else to put it. And by the way, when I said India has a better future than Japan and the U.S., it does. But remember, India's building up debt too. I don't particularly like what's happening in Delhi. Those guys are spending a lot of money and borrowing a lot of money.
That's interesting, Jim, because they were heavily criticized for not spending to get the economy back on track to recovery. And given what we're seeing now with earnings and the stock markets here, it seems that we're headed in the right direction. Would you still be apprehensive about India in light of the current borrowing?
I want to tell you again, I love India. If you can only visit one country, go there. But Delhi is building up a lot of debt now, and you say they're not spending enough. I'm saying for me, they're spending too much. And India is doing better than other places, or less badly than other places. But Mr. Moody's spending too much money, if you ask me. Now, I'm not Indian, so I cannot tell you what to do. But all of this debt is going to end up in terror. It's a good time to be old, because old people are getting the advantages of all this. But I have 2 teenage girls. Oh my gosh, young people today do not have a very good future in most of the world.
We'll reserve that conversation about how to deal with children on some other forum, Jim. But coming back to markets and coming back to where you think there is a value or there is a valuation mismatch, which is one currency, Jim, you would like to go long on for next couple of years?
Next couple of weeks? I'm not any good at short-term trading.
Next couple of years.
The U.S. dollar. I am long a lot of U.S. dollars. My second largest, I guess, is the Chinese currency. They're opening it up more and more. Not enough yet. I would open it all the way if I were China. I'm not China. I cannot tell India or China what to do. But I would own the U.S. dollar. It's going to get overvalued. It might turn into a bubble, and at which point I would urge everybody to sell all of their U.S. dollars, because it will be the end. The world is looking for something to compete with the U.S. dollar for political as well as economic reasons. I don't like saying this. I'm an American, but I have to face facts.
Jim, if somebody has the option, to diversify and construct a portfolio which is a combination of Indian stocks and few other global stocks, for an Indian investor who's watching the show right now live and then perhaps later on the internet or on the Twitter, do you think it is important to diversify at least 10 to 15% of your wealth outside India?
In the world should have some money outside of his own country. First of all, there are great opportunities in many parts of the world. And second, as an insurance policy, if nothing else. Everybody has health insurance. You hope you never need it, but you should have some investments outside of your own country, whatever your country is, for both investment reasons and insurance reasons. So yes, if I were an Indian, I would own, and you know what you're doing, you will probably find some good Indian stocks to buy. I'm very optimistic about Indian tourism, for instance, in 2022, 2023, and agriculture. But you should also have some money in other countries. There are other countries and other opportunities, and also for insurance.
So, Jim, if one has to, let's say, choose your 3 favorite countries for this decade. One is India, second is China. I'm confused about the third name. I know one is India, second is China. I don't know the third one you want to speak.
Well, as a country for a decade from now, I would say Russia is better than others. But at the moment, the Japanese stock market, because the Bank of Japan is printing so much money and buying ETFs and stocks, the Japanese stock market at the moment, the Japanese stock market is still down 35%. It might go back to the old high. It's been down for over 30 years. That's a long time. But as a country, oh no, Japan, a decade from now, oh my goodness, no, they have serious problems.
Well, Jim, we've just covered a range of topics, and I was waiting for you to raise your silver cup, the silver chalice, with some warm water before we say cheers, and we thank you for joining us.
That's because ET always takes my breath away.
Well, I appreciate your time. That's Jim Rogers, a very dear old friend and a great market commentator, someone who's got years and years, I won't say years, but decades and decades of wisdom and experience. I appreciate your time, sir, and thank you for joining us.